Welcome to Biztech's Malaysia Tech Ecosystem Show. Today we speak to Rina Neoh. She's the co-founder and partner at Ficus Venture Capital. Now, this show is part of our partnership with the MBAN Summit 2024, which takes place on the 25th of September at the Asian School of Business in Kuala Lumpur. Now, Rina brings a very unique perspective to the tech ecosystem as an employee, as an entrepreneur, as an angel investor, as a venture capitalist, and also someone that holds academic and board positions across several organizations in the region. Now, with that, welcome to the show, Rina.
Hello, Brian. Thank you for having me. And, thank you for, creating this platform for all of us to have a real conversation. So I think, our earlier chat, I feel that real chat with substance, not scripted, is important. Sometimes people just need to talk and either they vent their frustrations or they just wanted to seek help. A lot of founders, they wanted to ask, they wanted to speak to someone, but maybe they don't have a chance to actually do that. So I always, salute those podcast hosts who tirelessly, do many episodes and trying to bring the stories to others. Malaysia has great stories. In fact, I think, if you go to maybe those smaller towns, to me, I think, entrepreneurs doesn't need to be a tech unicorn. Anyone that runs a business is an entrepreneur. They have a story to tell. But anyway, our topic today is the tech ecosystem. So let's get on it.
Yes, and so for a start then, Rina, you've such an interesting background. Tell us about your journey and how you started way back, the Penang girl in Singapore, and then how you ended up very quickly being rich at a young age, listing a company on the ASX.
Well, I was born, bred in Penang until, then I did my training program. Then I was very clear that from young, I needed to make money so that I can give my mom a better life. Well, my mom is a single mom. She brought us up. And we came from this, if those who know Penang, rifle range flat. So it's a high-rise building. Those days is like the big condo, 17th floor flat. Is a very dodgy place. So, with lots of drug addicts and all this. So that is the background. So I guess growing up as kids, my mom is busy. She's a hairdresser in our small little one-bedroom flat. So she is busy putting food on the table. So she doesn't have time to really tell me or my brother what not to do. So I grew up, running around, and I think that is the reason why I think some people ask me, I mean, you're a girl, you're a woman, but it seems like you are very, and the way you work, it may be a bit like a, lack of a better word, is like a guy, a gangster, if I may say. But it's
Okay.
really not that. It is because I think when I was young, my mom, my parents don't have time to stop me from doing anything. Luckily, I did not do anything funny. But
Okay.
it wasn't like, Rina, don't do this. And a lot of girls, maybe, a lot of kids nowadays grew up very protected. They are not, taking risks because everything is provided. So maybe those days, our age, we were just running around, either in a kampong or neighborhood, with friends. So it was liberty for me. But then, I knew very well that I need to study hard. I need to get a good job. And so during those days, like 90s, right, .com boom. So I remember my thesis was Y2K and it didn't happen. So I was like, I wasted my time. Then I landed my first job in Singapore. Obviously, the exchange rate was very good. And I still clearly remember Singapore, putting up this great banner and say they welcome professionals. So, that's how I started my first job in Singapore. with two tech companies. I was a comp science student, so I was doing a lot of those back-end work. I didn't like so much talking to just computers. So I switched to do business development. And then after 5 years or so, I accidentally landed up a job in a startup. I was thinking twice, actually. You know, those days in early 2000, startup was like just coming out. It wasn't, there's no word unicorn and all this, but I was thinking of, why should I leave a comfortable job and taking a risk in a startup? But I'm glad I did. That actually, became, something that changed my life. But if you ask me, did I plan to be who I am today, to be an angel investor, to be a VC? No, never. I was just very clear of, I know tech industry is going to give me good money and I want to be in the game. So I joined a startup, and, we were quite lucky. I wasn't the founder, but I was the early team, and then we got that listed. And long story short, we had our first pot of money. If you call it paper money, it's worth, something. And then I think I've also shared it with some other friends before. The whole company then later on got into trouble, and they were delisted. Yeah. And that's where I was doing my MBA at that same time. And then finally me and my chairman back then started our first boutique fund, MacArthur's Capital. So that was in year 2006. So MacArthur's is my first fund. I was the youngest one, and we have 4 other partners. Unfortunately, one actually passed away after a year. So I ran MacArthur's. The name was given to me because we were really don't know what we were doing. We were just wanting to invest in a proper manner. We call it MacArthur's because it sounds like Mercato, so it's a marketplace. So MacArthur's then, went on to invest in quite a number of companies. It's still there today. It's called MacArthur's still. But I left MacArthur's after running for 10 years. So in 2016, I left MacArthur's.
Rina, can I stop you at this point now? How did you make that transition then from employee, and then after that listing the company? Because this is something that a lot of people ask. So how do you make that leap, right? You went from employee then to having a pot of money. You said, I think your shares were at one point worth something like 2 million at a very young age, obviously 2 million Australian dollars, because you're listed on the ASX. And then after that, you said company got delisted. So what money did you have? And then how did you get involved? Where did the money from MacArthur's Capital come from?
So from that pot of money, when it got, almost delisted, so it didn't happen like, in a short period of time. There were some board fights, the founders and the chairman, and also the founders, the funders actually got a board fight. And of course, then I also witnessed how, if you want to list your company in the stock market, people always say that listing is good, but it comes with a lot of other things that you need to take care of. If your stocks are, are very, it's held by hunters, for example, right? They can actually bash you down. But in this case, right, I saw with my own eyes that because the people who supported the listing were the chairman's friend, who felt that whatever was done to him is not right. So they did not think twice to offload everything. So I remember, this group of people, they are good friends, and they supported each other's in many other listings. So these 2 young founders were, I think a bit naive to think that they can actually get rid of the shareholders. Yeah. So anyway, when they dumped the shares, because no love lost, right? It's just one of their listed co. So the shares went tumbling down. Of course, I'm, part of, I'm at the my chairman's side. because he felt guilty that he brought me in and I have to see this, drama going on. But I said, I saw it from an idea which you funded 300,000 to us working very hard, got it listed, and then, someone actually kicked you out, and, the whole thing just collapsed like a Korean drama. So at that time, at a young age, I was thinking, wow, the Chinese say, why so soy? It's like, why am I in this situation, right?
Right.
But thinking back, I thought, maybe I'm privileged to actually witness this at a very young age. Not at age. So I've gone through quite a bit. I remember writing the resignation letter for the chairman because they wanted to kick him out. There was a lot of I think things that were not done right. And I always advocate that, as shareholders or as board members or even management, if you cannot see eye to eye, let's have a peaceful separation. Do not need to do it in that dramatic way. So anyway, from that pot of money, I told my chairman that, one of the things that after working for him, for like 5 years, I realized that he was investing a lot as angels, but it wasn't a very structured way of investing. It was just like, all these SME taukas, they just put money and they forgot about it. And, maybe sometimes they were too enthusiastic. They were too passionate. They actually make the founders feel like they are terrorizing them. But, it's in the maybe a slightly old-fashioned way, they were trying to help. But, there is old-fashioned businessmen versus the young tech startups who may not take it, in a positive way. So I think that is one area where I feel why there are not many angel investors in this region, because Asian businessmen likes to control. And why Silicon Valley has so many angels is because they had a lot of tech founders who became rich and can invest. And they were still young, the likes of anyone from Google, PayPal, they made money from their stocks and they went through the tech, journey, versus these, Mr. Tan or Mr. whatever that built his business from shipping, mining, and while they've put in some money, they want control. Even as a VC, so anyway, coming back to how we then, with the small pot of money that I still have left, we started MacArthur's. And of course, I'm the poorest and youngest, so I need to do most of the job. But when people came to us to raise money, for example, 100,000 at that time, my so-called partner or bosses, would take the majority. Like they would take 90,000, for example. I would take 5, 10.
Okay.
Yeah, so I felt that, well, first of all, I didn't have that much money. Second is these are sharks, and if they let me swim with them and left some crumbs for me to eat, and did not swallow me, I think quite fortunate already. But I learned a lot from the circle, from my chairman's circle of friends, and that's how we built our own circle of angels. So at that time, a lot of chairmen of GLCs, because they were friends, so they supported. So angel group is very much friends supporting each other. Those are the I would say the more elusive group, right? Many of us are not members of certain angels group, like in Singapore, Bansi. I was never a member of Bansi, but we have this small group of angels. One of the reasons is because I think to get the tax exemptions and all this, right, you have to declare your income and all this. So many of them do not want to declare that. Yeah. So anyway, one of the things that I really hope, the ecosystem builders like MBAN, Bansi, they could really do more training for the angel investors instead of just the startup. Everybody here, government and everybody is training the startups, but not too many agencies. Of course, MBAN does training for angel investors because it is a supply and demand, right? If you don't have the angels to support the ideas, for us as VC, we also don't have any pipelines to invest in. Yeah. So I think that is how, I accidentally became an investor. And then after 10 years, I started to invest in my own businesses that I feel is close to my heart. Like I bought a master franchise of a preschool, international preschools in Singapore called My Champs, because I was doing a lot of work in Philippines and I felt that the preschool segment there's a vacuum for international preschool. So I brought it there with my own money. Now we have 6 schools. It's not going to be a unicorn, but of course, as an investor, it's a very steady cash flows. And I like the fact that I can use this platform to also help the marginalized children, from the school's proceeds. Because my other investments are very high risk. Like this year alone, I just have to write off 2 startups that I invested in.
Okay, so, what were they and what were the lessons maybe in terms of, and this is things that we don't talk about a lot of times. As VCs like to talk about their successes. Very few talk about the fact that you actually have to write off investments. You have to have these difficult conversations. You've got to close down companies. Sometimes it may be selling the shares at the discount to the founders because this business is not going to make any money for you.
Yeah.
So share with us a little bit about that.
So I think it comes back to as an investor, right? If you think that you invest in one company and then the company become a unicorn or it gives you a huge return, I think that is as good as buying lottery. That's why angel investors, you have to build a portfolio. And I always tell people that, of course, you have your bankers that push a lot of products to you, structured products with guarantees. But investment, there's no guarantee, right? For angels, I think, you have to build your portfolio across different industries and also for a longer period of time. So for VC, same. When we raise money from our LPs, we have to, we are just like a startup, when I first raised for Ficus, I don't know how many doors, how many GLCs I have to knock. And the answer was always, we don't invest in first-time fund. We don't invest in local VCs. And so, it's not that only startups get a no, VCs also get a no, right? And we have to show them, okay, what industries we're going to invest in. And, how many companies we need to invest to actually make sure that we de-risk all the, macro or micro things that is going to happen. And as we move along, we have to balance the portfolio at all time, because Ficus is one of the very few VC that is domiciled in Malaysia. That means our investors put money in Malaysia. Many of the VCs, although they operate in Malaysia, is Cayman Island and all this. So we were a bit nationalistic, good and bad. But like I said, whether VC or angels, you have to have a portfolio company. So, for me, as angel investors, it is really an individual portfolio, I would say, preference. For me, I like education. Of course, from Penang, I do like food. But food is a tough thing. I feel like, it's my own money. Sometimes some companies, I've been holding it for the last 10 years. I don't have to exit because they give me good dividends. Whether, it will be a unicorn one day or not, I'm not chasing unicorn as an angel investor. But for VC, it's a very different story, because we promise our investors or LP a certain percentage of return. So we have to.
And this is the myth, isn't it, Rina? The reality is, because one of the things is when we talk about unicorns, unicorn is really an exceptional. A lot of times you can be a very good, profitable company, around 100 million, generating good returns. Perhaps a local listing is a possibility. And that's fine, as long as it's part of your portfolio, right? But I think people are often chasing that elusive, that you said, the lottery, whereas you could actually have 3 or 4 very good companies that are worth a couple of $100 million each.
Yes, yes. And I think in a lot of VCs that claim they have a unicorn companies, of course, they have a big check size. And they basically, is able to invest across multiple geography, and they can issue the check. Of course, if you start early, some of the VCs has been around for 20 years, right? You definitely have that advantage. And for VCs, right, it's also a very competitive, market. Everybody is chasing for that one good deal. And it's a beauty pageant, right? So the founders are smart right now. They will probably go and talk to many VCs, and some of them are smart enough to negotiate, at the VC. It's no longer, if you have money, I will take your money. They look beyond that already. But if you ask me, well, I think MBAN, this particular summit, our topic is that, can angel investors make 20x? Well, if you invest at a valuation of 1 million and you keep it for long enough, why not? It is. I just exited.
And it's about investing early enough, isn't it? If you're really,
angels is really early. Sometimes it's just a concept, But I think some people slightly confused that crowdfunding, if you invest in crowdfunding, you are an angel investor. I think the word angel investors means you actually are more hands-on. You provide a lot of mentorship to the founders. And that's why, if you invest in crowdfunding, you don't really get to access the founders unless you stalk the fellow on LinkedIn and try to connect. But because your 5,000, 10,000 is in a pool or in an SPV, right? So you don't get to have hands-on until maybe, but it's also a good strategy. I've seen some of my angels friends actually do this kind of bet. They just put 5K, 10K in all the crowdfunding, and they take a look at it. It's a filter.
Yeah, and it's a very good, and so Rina, that again, that's also a good 101 starter strategy. I got 100 grand to, I got 50 grand to invest, equity crowdfunding, and I use that 50,000 as my learning curve for angel investing.
Yes, yes. I think, crowdfunding is really a good starting ground for those who has small money that they can part with. Like for me, right, if you invest as an angel or even crowdfunding, just consider the money gone. Because if you need the money and you need it for rainy days and all this, right, the chances are very low if you just invest in one. So I always tell my investors that, as a savvy investors, you have to know how to do your portfolio management. The risky investments like angels and VCs, right? There's no guarantee. We can't guarantee that we'll give you X return. This is also one of the things that many of the potential investors that we VC go and speak to, especially the listed company CEOs and the rich tycoons and Dato and Tan Sri of the world, right? They will ask for guarantee, but there's no
guarantee in this case.
Yes, because as VC, we call the money. When our investment committee decide that we're going to invest in this particular company, when we call the money goes to the company. It doesn't go to us. We take usual 2% management fee. That's it. Very, very transparent. And we don't take your money and keep in a bank so that, you know, at least I can earn interest, right? There's no such thing as that.
Yeah.
So I think that part, you know, needs a lot of education. I think there's a lot of work to be done, but I'm glad there are people like MBAN next year who is educating the investors what not to do and what they should do with that, you know, angels money that they invest in an ecosystem.
Now, Rina, what are you seeing in the funding landscape in the region, not only in Malaysia, but in the region in 2024 so far? We had obviously the peak of venture capital and the frenzy in 2021. And then we've had some sort of funding winter. What are you looking at? What are you seeing in 2024? And what does 2025 look like?
I think you just have to look at the E27 Tech in Asia, right? There are no longer news of, you know, especially very tech, you know, those deep tech startups raising lots of money, especially in this region. But we do see like brick and mortar companies, like recently, you know, our homegrown brand, Zeus Coffee, managed to raise, you know, quite a big round.
Yes.
But that is, I think investors, some got burned with the promise of, you know, high technology, you know, and a lot of those, I would say e-commerce model doesn't work anymore because I think none of the e-commerce company really makes money right now. So a lot of money was actually dumped into that, you know, that industry. So I would say that even for Ficus, right, we although we say, you know, we invest in technology sectors, but nowadays I think every industry need to have some form of technology. But for Asian startups, if you are saying that, you know, you are going to do deep tech, you know, you're going to do drug discovery and all this, right? I think maybe the funding pool to support such ecosystem may not be here because, like, you know, deep tech and, you know, creating a product, for example, like Aerodyne drone, right? Or like our EV company, the motorbike, creating a product, you know, a physical product itself versus launching an e-commerce store, a wallet and all this is very different ball game. You know, product and companies with IP needs a lot of, I would say, how deep pocket. So what I'm seeing right now is that maybe you can raise Series A, but when it comes to bigger money, investors are basically taking a back seat.
Okay.
And I think maybe this US election, you know, if I'm an investor, I will probably be, if I'm angel investors, I'll probably be looking at the stock market, you know, if I want to make quick money, right? So, but for VCs, of course, I am seeing that maybe not too enthusiastic. Like, you know, some of the Web3 companies that we're looking at, Metaverse Web3 was a hot cake. Everybody jumped into it. Now, I think, you know, everybody is like, Metaverse is almost, you know, very quiet, non-existent now. So a lot of money has been burned. So the VCs are now maybe, you know, a bit more cautious in investing in things that they maybe don't have such a good grip. Like for us, right, even we are VCs, we've seen many companies, we are not the experts in, you know, a certain industry. That's why in Ficus investment process, right, we do have what we call the experts review. So if, let's say, I come across, for example, a Web3 companies that I couldn't really understand, you know, why Web3 is so important and where is the business model, we would then invite the experts to come in so that they can give a fair review, you know, on behalf of the founder, and these people could be a potential customers, or they are developers. So I think for startups, right, going to the VC to raise funds, you perhaps also need to be a bit more smart to actually research, what kind of investments and what kind of appetite a VC is looking at. Like right now, Ficus is a small fund. We are at the end of our investment period already.
Okay.
So by next
year, are you raising
year,
a new fund?
we are working on something.
Okay.
We're working on something. For a VC, right? Usually, if you are a first fund, you basically, if you're lucky, you do a very good return, so that your LPs will come back to you to support for the second fund. So for first fund is a bit I think pressure and stress that we must make sure that we do well if you want to survive in the VC industry. That's why many of the older funds, they're fund 1, fund 2, fund 3. That's because they did well in the first fund. But those who existed many years ago, 20 years, 30 years, right? At that time, I think the industry is not so competitive.
Yes.
Now, a lot of second gen, third gen, investing. And the trend is now, these family offices, they used to put money in VCs. But now they say, hey, my grandson can run a VC firm. We want to invest direct.
Okay.
Yeah, so they no longer need a VC to be the, the fund manager. But of course, everybody can invest direct if they have money. It's just that, I guess, you pay someone to do the job in a proper manner, in a proper process. And being a VC, even Ficus potentially will have maybe 15 or 20 portfolios. Every week, we have to see so many companies to pick one or two. Yeah, so right. I guess I've seen, some Tauke who say, why should I give you 2% of management fees? I can invest myself. I'm saying, sure, why not? If you want to do the job yourself, by all means. We only want, investor and founders needs to have that clear understanding as well. That, if each one party feels that, hey, you're taking advantage of me, like in this case, the potential investors say, why should I give you 2%, to run my money? So I said, well, this is what we do. So, and it goes the same with the angel investors as well. With that little money that angel investors put in early founders, I think the founders need to be aware of, what are the condition precedents that, comes with it. So I mentioned to you, I have to write off 2 companies, right, as angels. Yes. Investors. And one of the investor from US actually is suing this company, this founder, for negligence. So I'm a smaller investor. So we have to be embroiled in these kind of things. Losing money is something, but to be in the lawsuit and is something you wish you don't have lah. But
absolutely,
anyway, it is not a bed of roses. I think one of the things that I really want to hopefully with the MBAN Summit, I think I told Dr. Siva and Alan as well.
And Dr. Siva, Alan are her co-panelists on during the MBAN Summit, which you should attend on the 25th of September.
Yes. We're going to talk about, can angels make 20x return? And then I'm sure they're going to tell, share all the rosy stories and the heartbreaking stories as well. I've seen investors that I've invested in, and the company did not do well. So this lady actually from Philippines, so she walked past me, and then I'm actually transparent to her. So I think, these are the things that probably, some people may think, why should I, invest and try to be these angel, so what do you call that? Full of goodness to try to help these founders. But I guess that's life, lah. In life, some people come to teach you a lesson, and some come to enhance your experience. So I am still investing until today because I believe that it's the process that I enjoy. And like I said, once I deploy the money, I would say that it's as good as gone. If it comes back, like one of the portfolio that I invested, it was a very small money. I think it was only 50,000 ringgit about 8 years ago in a Philippine school management system. So that guy was, as typical founders, became a lot of media attention. And usually, when you have a lot of media attention, you're in media, sometimes the head become too big. Like they thought it was successful. A lot of media are, writing about fundraising, how much you manage to raise. I mean, as a business, very fundamental, business exists to make profit, right?
Yes.
If you keep raising to fund your operation, that means your operation, your business model is not making enough. So you need equity injection. So fundraising is good at the right time with the right investor, but you can't fundraise forever. Your business have to generate profit to be called a business, right?
Absolutely. Yeah. Rina, it's been a great conversation. Thank you very much for taking your time to come on the show.
Pleasure is mine, and hopefully we'll get to see you. I'm sure you will be at the MBAN Summit.
Yes, I will be.
Okay,
yes.
Great. So I'll see you then. Thank you so much, Brian.
Thank you very much. I'm Brian Fernandez, and we've been speaking to Rina Neoh, co-founder of and partner at Ficus Venture Capital. This has been Biztech's Malaysian Tech Ecosystem Show. This conversation is part of our partnership with the MBAN Summit 2024. Catch Rina there on the 25th of September at the Asian School of Business in Kuala Lumpur. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites.